What's going on, guys? Jay here. In this video today, I'm taking you through my detailed daily routine for looking at ICT silver bullet setups. The first thing I do when I wake up in the morning at 6:15 is make my bed. A lot of military guys will tell you that if you don't accomplish anything during your day, at least you accomplished making your bed. Then I jump in the car to get to the gym for about 30 to 45 minutes, and I want to make sure that I get back home at around 8 a.m. I don't even look at the charts before 8 a.m. I'll make myself some coffee, and then I get in front of the screen, and then the first thing you would want to do is to load up your indicators on your chart. Here are the indicators that I use. I use an imbalance finder dynamic, I use a fair value gap indicator, and then we also have the coveted sessions liquidity tracker custom indicator for the strategy that I use. If you want to see the settings, this is what it looks like. And now our chart looks like this. I'm now on a 15-minute chart, and I add the alerts on the liquidity high and low of the previous session. I'm going to start looking for the draw on liquidity as well. So I pull a fib from the low to the high, and then I start looking at the optimal trading scenario for me. On the 4-hour chart, I can see that there is a draw on liquidity to the fair value gap at the bottom, but since we are in a pretty big fair value gap, this is the optimal trade setup that I would like to see, is for the market to go down into that discount, and then there's a fair value gap that is being highlighted in yellow, and that is my optimal trade for that day. So my bias is long. I also add on this image a 9:30 red folder news marker. You can see there's a vertical dotted line there, and I add the ICT silver bullet hours in green because it adds an extra confluence to my strategy when the trade happens between 10 and 11 a.m. This is the checklist that I use to get into a trade, and I need to see most of these checked before I get into a trade. Essentially what I'm looking for is for a raid or grab on liquidity, which my blue line indicators will give me when they turn red. Then I look for a reversal, which I identify by marking out the break of structure that would need to be broken in order for the market to go back the other way. And then I need to see velocity in the other direction. And that's being shown through fair value gaps forming in the other direction. Once the raid occurs and I've marked out the break of structure, the market gives me a fake run up. So the candle actually wicks in that break of structure but does not create the fair value gap that I'm looking for in order to enter. A few minutes later, the actual run happens. So we have a strong displacement through the break of structure that's creating a fair value gap. And then I want to get in on that breaker candle. So I am tagged in at the moment. Most of our conditions are met at this point, and I'm targeting that blue opposing liquidity line that I've marked out. And I'm going to take 50% off at that emplacement and then trail the trade all the way up to the second liquidity line that I've identified for this trade. So it does happen. TP1 is done. I am trailing pretty tight behind that fair value gap. I'm also managing my MT4 accounts separately, and those are completely out. So I don't have any trailers on there. I remove my position completely at 2R on the MT4s, and I'm expecting this one to go a little bit higher, but I've already taken a partial on this trade. I eventually do get kicked out, but it's okay. I've taken a full TP on my MT4s and I've taken a partial on this one, and the trailing stop loss took me out in profit. There's a few questions you may be asking yourself. Why did I put my stop loss at the bottom of the bullish candle instead of putting it all the way down to the swing? Well, if you see a bit further before this trade, this liquidity line has actually also been taken. So when the move went down, it took out this one, and then the next area of interest for me down would be this fair value gap here or the new week opening gap, because the next liquidity line is all the way down here, which has been untapped. So it was very improbable for that liquidity to go back all the way down there. So for me, the move started when the liquidity was taken here, and there was no reason for the algorithm to actually go back and grab this hanging liquidity because most of it has already been taken when this blue line became red and when this blue line became red as well. Also, technically, the black candle doesn't tap back into the fair value gap because you need 3 candles to create a fair value gap, and this is candle 1, this is candle 2, this is candle 3. So the fair value gap is only created at the close of this candle here. But here's a trick for you is when you see that there's displacement on 5 minutes and it's creating a fair value gap while it's printing, you can drill down to your lower time frames and see if our conditions are met on that time frame. And you can see that on 3 minutes, you have this displacement and you have the fair value gaps that are being tapped into with candles. And this is a signal that the market is fractal. So if on 3 minutes you're seeing an entry and on 1 minute you're seeing an entry as well, these are signals to actually go in. So if we look at the protocol, we want a 5-minute fair value gap to be printed, but you can use a 3-minute entry or a 1-minute entry. There's no rule against that. It's really a filter system to see a fair value gap on 5 minutes. You know that it's been moving on 3 and it's been moving on 1. That's really the only reason why I look at the charts on 5 minutes is to take all those fake out moves out of the equation. So I know that when there's a fair value gap printed on 5, that the market is moving in that direction. So after our trade, let's review together to see if there's some things that we're missing. We did identify the RAID. We marked out the premium and discount zones, but we were going long in a premium, so we're going to leave that one out. We avoided and cleared the high impact news. We identified the liquidity grab. We marked out the breakup structure required for a valid reversal. And then once the candle body broke through the breakup structure, it created displacement with a fair value gap on 5 minutes. So that fair value gap created support. There was no inversion in this situation. We pre-filled the trade's stop loss and take profit at a minimum risk reward of 2. And we entered on my MT4, I enter the values in the trade manager, and I have an auto break even at 2R. So when I fire, I manage the trading view trade, and then I let the MT4 manage itself with the little trade manager that I have. I entered a limit order on trading view, and I placed a market order in MT4, and the trade had offered at least 10 handles. And then the stop loss should be clear of the previous swing high or low, since there is no reason for the algo to go back there. So in this situation, I'm not going to check that off because I put it on the candle that created the fair value gap. But even if you put your stop loss at the swing low, this would have been a trade that gave you a minimum risk reward of 1 to 2. All of our checklists, except for these elements, has been checked. And this is what you want to evaluate after your trade so that you can start journaling and enter your thoughts about the trade. So the last part of my daily routine is to actually journal the trades so that you can refer back to them in the future when you need to. So you're going to want to write your thoughts in there about how you thought the trade was setting up and how you executed. So I like to use TradingView because I'm already using it for a lot of other things. So the way to journal your trade into TradingView is to go up here. Once all of your markings have been done, you go to publish idea, and then you would want to write today's date or the date of the trade, June 28, 2023. You took a long win and then 2R, for example, or 2.5R. And then please provide a meaningful and detailed description so they actually tell you what you could possibly write in here. But setup was good, lacking premium discount. aggressive on entry, entered on breaker with FVG. And then try to keep this very positive because you're feeding your subconscious with this information. So don't write, I suck, I should have listened to my plan, I didn't do it. Obviously, if you didn't follow all the rules and you took a loss, just write in there, you know, what are the reasons that loss occurred and how you could prevent it the next time. Trailed too tight on trading view, MT4 better managed. You can write a grade maybe for this trade. You could say grade 7 on 10 for this trade. And then once you are finished, you choose a category, and this is mandatory. You could just write anything, chart patterns, and then this is going to be private for you. It's an analysis, investment strategy, long, and you can add more things in here, but I like to keep it simple. And then you would publish your private idea, and then this is how it shows up once it's rendered. So this will exist forever, and then when you go into your ideas, you have them in here, and you're able to visualize the information as it occurred in real time. So guys, if you found this video helpful, please give it a thumbs up and consider subscribing to the channel for more content like this in the future. Thanks and have a great day.